Is grid money safe to use? If you are retired or you are sitting there counting down the months until you can finally hand in your resignation, this is a question that should be at the absolute top of your mind. Why? Because at this stage of your life, you do not have the time to make a mistake with your money. You do not have years ahead of you to recoup losses from a flashy new smartphone app that promises to make your financial life easier, but ends up costing you your peace of mind. I want you to take a deep breath and look at your financial reality right now. When you are living on a fixed income or preparing to transition to one, every single dollar has a job to do. Your money needs to be safe, it needs to be accessible, and it needs to be working for you, not against you. Yet, everywhere you look online, there is a new app, a new fintech company, or a new digital tool claiming to revolutionize the way we handle our cash. One of those names popping up everywhere is grid money. It sounds convenient. It sounds like a safety net. But I need you to ask yourself the hard question. Is it safe for you, a person who is trying to protect a lifetime of savings? Let's strip away the marketing fluff and look at exactly what grid money is. It is a financial technology app. It is not a traditional bank, though they partner with banks to hold your money. For a subscription fee of $10 a month, they offer you cash advances up to $200, budgeting tools, and a feature called Pay Boost, which attempts to advance you a portion of your projected tax refund throughout the year. Now, let's talk about the fear that brought you here today. The fear is that your money will disappear into a digital black hole, or that you are falling for a scam. So let's answer the big question directly. Is grid money a scam? No, it is a legitimate fintech app. It is a real company, and their banking partners offer FDIC insurance, which means your deposits up to $250,000 are secure against a bank failure. Financially and technologically, the platform itself is secure. But listen to me closely. Just because an app is legally legitimate does not mean it is safe for your financial health. There is a massive difference between a platform being secure from hackers and a platform being a safe choice for your retirement strategy. Let's look at the underlying problem. Why would someone approaching retirement or already retired need an app like grid money? The problem is often cash flow. You are waiting for your first Social Security check, or your pension payment is delayed, or a sudden emergency expense pops up, a broken refrigerator, a dental bill, a car repair, and you find yourself short of cash before your monthly income hits your account. You feel stuck. You don't want to pull money out of your long-term investments when the market might be down, and you don't want to put a high-interest balance on a credit card. So, an app that offers a quick $200 advance with no interest and no credit check sounds like an absolute godsend. But I want you to look at the math, because the math never lies. Grid money charges a subscription fee of $10 a month. That is $120 a year. If you are using this app primarily to get a one-time or occasional cash advance of $100 or $200, you are paying a massive percentage of that advance just in subscription fees. If you borrow $100 and pay $10 a month for the privilege, that is a staggeringly high cost of capital over a year. It mimics the very cycle of fee-dependent banking that keeps people trapped. Furthermore, if you are retired, features like Pay Boost, which are designed to advance money based on a regular, active payroll paycheck and predictable W-2 tax withholdings, do not align with how retirement income works. Your income now comes from Social Security, IRAs, 401ks, or pensions. The app's mechanisms are fundamentally built for traditional hourly or salaried workers who need to bridge the gap between biweekly paychecks. Trying to force your retirement income stream into a system built for active payroll can lead to administrative headaches, connection errors with your bank, and unneeded stress. Think about the mental energy you waste worrying about whether an app is going to successfully sync with your account, whether an automatic deduction is going to cause an overdraft in your primary checking account, or why customer service is taking days to reply to an email because they don't have a physical branch you can walk into. Is that how you want to spend your retirement? With your heart in your throat over an app on your phone? No, you deserve better than that. You have earned the right to simplicity and absolute certainty. So, what is your actionable takeaway today? If you are retired or nearing retirement, your goal is to eliminate financial friction and unpredictable fees. You do not need to rely on fintech cash advance apps to manage your cash flow. Instead, you need to build your own fortress of safety. First, I want you to establish a true cash buffer in a traditional, high-yield savings account at a well-established, FDIC-insured institution. This is not your long-term investment money. This is your liquidity. You need at least 6 to 12 months of your living expenses sitting in cash, completely safe, completely liquid. When an emergency happens, and we know it will, you do not open an app to request a $200 advance. You simply transfer the money from your savings account to your checking account. No subscription fees, no levels to climb, no digital hoops to jump through. Second, if you are experiencing persistent cash flow issues during your retirement transition, it is time to sit down and audit your monthly budget line by line. Look at where the money is going. An app cannot fix a structural deficit in your spending. It can only mask it temporarily while collecting a monthly fee from you. Address the root cause of the cash crunch rather than relying on a digital band-aid. Be the master of your own money. Do not hand over control, link your primary accounts, or chip away at your fixed income with monthly subscription fees for tools you do not truly need. Keep your banking simple, keep your security tight, and keep your financial power in your own hands. You can do this, and you must.